Welcome back to the Real Estate Forum, where we talk about everything from leaky roofs to loan approvals, and sometimes both in the same week. Today, we're diving into the financial engine that makes real estate possible, the mortgage. Now, before your eyes glaze over, hang in there with me, because understanding how the lending really works can save you thousands, maybe even tens of thousands over the life of the loan. Whether you're buying your first condo, refinancing a single family, or adding to your portfolio of multifamilies, the right lender can make or break the deal. So to help us cut through the mortgage maze, I've invited Andrew Marquis, a lender with Cross Country Mortgage, to help us out. He's seen it all, from record low rates to the roller coaster we're on today. And Andrew knows how to help his clients navigate the system efficiently and effectively. Let's get started. Thanks for joining us.
Thank you so much for having me, Mike.
I really appreciate your being here and having the time.
Thank you so much.
So let's talk about the elephant in the room, the 50-year mortgage. Are you excited about this?
Not so much. No,
Okay.
I don't think so. Yeah, I don't think so. I don't think so.
I'm with you there too. It's a crazy premise, but you tell me more about your thoughts on that.
Yeah, it's interesting. I mean, I think the government, in a lot of ways, is trying to make housing more affordable, right? And I think in the Boston area, we know that obstacle more than any other region, right?
Yes.
I think our affordability here is about the worst in the country, Mike, or?
We're in the top three between Manhattan, San Francisco, and Boston. I mean, the three major cosmopolitan cities. And again, taking Honolulu, Hawaii out, but yeah.
In the 48 contiguous states.
Right.
Yeah.
Yes.
Yeah, I think what's challenging is that the administration, like them or hate them, what they're trying to do is make homeownership more attainable for folks.
Of course.
And I think, like we spoke about, earlier, we were just, chatting before, the first-time homebuyer age. How old were you when you bought your first home?
I don't remember. I think it was my late 30s.
Okay, so I was actually 25. I was pretty young, dove in.
Sure.
But the average age of that first-time homebuyer keeps creeping up, right? I mean, you quoted it.
I heard that.
Yeah, and so I think the administration, we go back to the 50-year mortgage, they're trying to make housing more affordable by reducing the rates. And I think what they're starting to do is introduce additional tactics. This elongated amortization of 50 years. I saw something about a portable mortgage. I don't know if you heard about that.
I didn't. Tell me more.
So I heard something today that the head of the FHFA introduced this idea of the government is considering portable mortgages.
So the mortgage would switch properties.
Essentially, yes. That the homeowner or the borrower could port that mortgage from one property to another, which to me, I don't know how that would be doable. When you take out a mortgage, you're signing a contract, right? A 30-year contract or a 20-year contract that ties it to a certain piece of collateral. There's investors behind the loan.
Right, but also that collateral, I mean, the size of the land, the condition of the property.
Right.
How could that ever work?
Right. So it will be interesting to see which of these plans actually pan out, or is it all just propaganda? We don't know, right?
No.
But I think, the interesting thing about real estate is just how it's always changing, right? I mean, think about where we were during the pandemic and where we are today, right?
Light years.
Yeah.
From lines around the block at open houses and 15 and 20 offers at a time, contingencies being waived right, left, and center, to today, where a home inspection contingency is, you can't waive it.
That's right.
You know.
That's right.
So no, things change a lot.
Yeah, yeah. No, it is interesting. I mean, I remember the end of the pandemic, rates were very low. Clients were waiving their inspection, they were waiving their mortgage contingency. They were paying way over the asking price. I'm talking hundreds of thousands over the asking price in many cases. And so it's just interesting to see how things changed, right? You know, the interest rates had gone up quite a bit after COVID.
Right.
And now they've continued to come down.
Let me ask you this. Do you think rates were too low for too long?
100%.
Okay. Say more about that.
Yeah, so I think you know, the issue with interest rates in my viewpoint is that they impact the real estate market and really the economy in general pretty significantly with minor adjustments. And so it's like anything that I think about, like making micro adjustments, Mike, in my opinion, can work. Like, let's make these little adjustments, see how it plays out, versus just dropping the rate, you know, from 5% to 2%, and having it sort of sit there with the federal funds rate at 0 for, what, 30 months almost, right? 2.5 years.
Yeah.
It created a major issue.
And we're seeing that today.
100%.
Because anybody with a 3-point-something mortgage, they don't want to give that up.
That's right.
You know, for a 6-point-something.
That's right.
Okay, they're like, oh, gee, I've got another child on the way. Well, they can share a room for a couple of years.
That's right.
Okay, so we're not seeing that turnover.
Yeah.
Okay. The other part of that is just the level of inventory to begin with. It's constrained because we're not building enough.
Yeah. Yeah. No, and I think the inventory for me, it's like a self-perpetuating problem. And what I mean by that is like if I decide not to sell my house, you're my neighbor, you decide not to sell your house, they decide not to sell their house. And I think like we talked about before, is there's so much equity locked up in the market right now, right?
Yes.
There's, you know, I saw a stat today that 40% of houses now in the U.S. don't have a mortgage. So there's
40%.
40%. So there's all these giant assets, hundreds of thousands, you know, trillions of dollars that are just sitting there. And then we have first-time home buyers that can't really get a foot in the market because there's nothing listed for sale, or the price is too high, or they don't have a down payment. And so it's gonna take almost like a generational shift, in my opinion, to really make this whole thing, bring it back in focus, if that makes sense.
Yes, and I understand exactly what you're saying, but those boomers, those baby boomers that are sitting in that 12 or 13 room Victorian with no mortgage, their big question is, where am I going to go?
Yeah.
And again, that goes back to, are we building enough? I think I'm pretty proud of Massachusetts for doing what they can with the MBTA Communities Act to try to change that zoning, to free it up. I think if you look back over the last 40 years, what have we as a society built? We've built the McMansion, you know, 5,000 square feet for that family of 3. We've built 2 townhouses, and a corporation will put up 300 apartments. That mid-sized structure of 6 units, 10, 20-unit building, you rarely see those.
Right.
And that's sort of what's missing. Those mid-level transitions, even if it's a 10-unit condo building. Another aspect of what Massachusetts did, the ADU law.
Yes.
How are you seeing that? Let me ask you, because I've had clients ask about this. You know, are there mortgage products that will lend to that?
100%.
Okay.
Yeah, so I had a recent meeting on ADUs, and the price that they were quoting, this was a company that was building them.
And just for everybody, ADU means accessory dwelling unit. So in-law apartment, or it could be a separate structure.
Yeah, so this is basically like an extra unit on the property. And it could be part of the property, could be attached, could be detached, right? There's different ways to tackle it, but it's a way that you could live generationally. You know, you could have your parents move into the ADU maybe.
Absolutely.
You occupy the Victorian. It could be just a rental income that you want to procure on your property. But it's to make housing, more housing, right?
Right. I've been a huge advocate, and actually Newton was forward-thinking And I'm really proud of Newton in that way. They were ahead of the curve and had a city ordinance that made ADUs by right for owner-occupied single families and two families
Wow.
probably about 8 years ago.
So they were ahead of the state.
Yeah,
Yeah.
absolutely.
Yep. Nice. Yeah, no, I mean, we will finance them. I would say in terms of like the whole ADU process, we're just at the tip of the iceberg in the sense that a lot of questions are being asked. A lot of people are saying, what would it cost? How would I do it? We can finance the construction of it.
Oh.
Yeah, lots of questions about it. But I think
If you have clients that have those questions, I've helped a number of owners build out ADUs.
oh, perfect. Okay.
So,
Because you're from Newton or from the
well,
area.
yes.
Yeah.
Yes.
Yep. Got it.
And it's, I've always been a big advocate because you get this big old Victorian, older couple, or a widow or something, and having that, they don't need all the space, but having somebody else around to help take the trash out, shovel the walk, just to be around.
Sure.
Not to mention, they're probably going to get $2,000 a month in rent
Yeah.
to help cover tax bills and et cetera, et cetera.
Yes.
So it's really a benefit.
Yeah, it's one solution to the housing sort of shortage
Right,
that you're describing, right?
And it's low-hanging fruit.
Yep.
You're not breaking ground,
Yep.
And going through the whole permit process.
Yeah. No, what I'm most interested in is sort of like where the market is now versus when we were getting 30 offers on a house. Like, what are you seeing out there right now?
It's tough. We're two different scenarios. A lot of times I use a strategy that I like to have it just under market.
The asking price, you mean?
Yes.
Okay.
To create a lot of excitement, and you create a bidding war.
Okay.
Very successful with that last year. One property got bid up over $200K.
Wow.
It was a multifamily.
Okay.
Another property in West Newton got bid up $50K. So it depends on how you position it. But we're not seeing those bidding wars anymore. But I like to use that strategy. That's
Still,
just,
yeah.
I do. But again, it's risky depending on the heat of the market.
Yeah. So every situation's a little bit unique.
Yes. We're not seeing waived inspections. Even before Massachusetts law went into effect,
Sure.
that was really on the way up.
And I think what you're basically saying is that the pendulum has swung back a bit in the buyer's favor.
Yes, it has.
Okay.
Absolutely.
Okay.
Days on market have stretched out.
Yep.
Days to offer have stretched out. We're seeing a few more price reductions.
Yep.
In Suffolk County, which is basically Boston. That condo market has softened.
Very soft. Yep.
Yeah.
Yep. I've seen that.
Yeah. Especially in the luxury market.
Yep.
In the waterfront. Middlesex County is still holding its own. There's probably a month and a half to 2 months worth of inventory,
Okay.
which is still a seller's market.
By any measure, it's still a sell because it's like
Absolutely.
6 months is sort of the right. Is it like 6 months or?
Yes, the window for a 1 to 4 months is a seller's market.
Okay.
Between 4 and 6 months of inventory is that balanced market.
Okay.
And 6 months and over is the buyer's market.
Okay.
But those numbers, I think, could be tweaked.
Okay.
I think
They're outdated.
they are.
Okay.
Things, again, they change over time, and I think it's more of a 1 to 3 as opposed to 1 to 4.
Okay. Gotcha.
3 to 4 months is more of a balanced market.
And then 5+ would be a buyer's.
Correct.
Okay. Got it.
Yeah.
Okay.
Again, that's just me. That's sort of how I view it.
How you interpret it.
Yep.
Yeah, no, I mean, it is interesting. I see the same thing. And, you know, people ask me this question sometimes too. And I think during the pandemic, I would write significant amount of pre-approvals. Like, I mean, I would have days where I would write 20 and 30 pre-approvals.
I bet you were writing offer letters.
Tons.
Yeah.
And the problem is very few of the offers would go through.
Of course.
Because the client would say, well, Andrew, that house got 36 offers. I didn't stand a chance. Or Andrew,
Right.
that one, I had ones that had 60 offers. Now what
That's
I find,
absurd. I mean, well, not absurd, but we lived it.
I write
yeah.
2 pre-approvals
Mm-hmm.
and I get 1 accepted. So I would say that buyer success rate is very high right now.
Yes.
Highest I've seen in a while, like 5-6 years.
That's
Highest.
good. That's
So I like
Yep.
that. I mean, I think that to have a more balanced market is more favorable for all parties.
100%.
You know, no one wants to
100%.
be running around. No one wants to have to pay $500,000 over an asking price for a home. And so,
and people feel as though they're being gouged, and it's just not a healthy market,
yes,
one way or the other.
yeah. So I feel like, in a sense, we're getting closer to that balanced market you were
I agree.
describing, and
Yep.
I think that's a great market to be in.
Sure.
And I'm curious, like, what's your outlook for 26? Like, where do you think we're going here?
Well, there's a tremendous amount of instability within everything.
Politically?
Everything. I mean, businesses can't make decisions for, long-term,
Sure.
hiring. Typically this year, this time of year, we're seeing a lot of corporate relocations
Yep.
or new hires on that fiscal year.
Sure.
Okay?
Sure.
We're seeing little to none.
Yeah.
And that's just, for me, a canary in the coal mine. I don't feel as though interest rates are going to move much. There's too much uncertainty. And again, it depends on who gets picked for the Fed next spring.
Sure. That's right.
And what we're seeing in the market is contradictory.
You mean the
signs.
stock market compared to Main Street? Is
Well,
that
no,
what you mean?
there's that, but inflation and unemployment.
Sure.
Okay. One thing I do want to ask you, we saw the Fed lower the rate, and the same day I saw mortgage rates tick up a little bit.
Yes. Yeah.
And again, it's like, wait a minute, they just lowered rates. Why am I seeing this go up?
Yeah. Yeah.
Tell me what your thoughts are on there.
Yeah. I mean, the Fed is controlling really just the short-term rate, the short-term borrowing rate.
Sure.
They're not controlling 20, 30-year mortgage loans. And I think people...
Oh, of course not.
People, I think the general public, there's a big misconception out there that when they
Okay.
see the Fed cut the rate a quarter, that they think, hey, instead of being at 6.25, I'm at 6% now. And
Yep.
it doesn't work that way. So
Okay.
really what we're looking at is where those rates are going to go longer term. Are there going to be more cuts? What's the Fed going to say about future cuts? We're always very forward looking. And I think that if you know something as a consumer about the way the market's trading, the markets already know it, right? Like just
Right.
like the stock
Exactly.
market, we're not uncovering new information.
So what you're saying is those numbers were already baked in,
They were already factored in.
and that rate cut made others nervous about the economy.
Yeah, it could. Yeah,
And that's when they said, well, no, maybe we should raise these rates a little bit.
exactly.
Yeah.
Exactly. So it's, I would say I'm a little bit more bullish about rates. I think rates will get a little bit better. I think the tricky thing is we all got so trained during COVID to have that huge dip. And I don't think we realized that just 2 years ago, rates were touching 8%.
Oh, I know they were. Yeah,
And
absolutely.
Some of my 30-year fixed products right now, depending on the day,
Yep.
are in the 5s now. Okay?
That's great.
So we're moving in a better direction, but you are right. Like, how much further can it really go? It depends a lot, right?
Yes.
There's a lot of factors here. I always look, Mike, and I think if the Boston market's a little bit soft, like we were describing, what's happening in more volatile markets? And I don't want to call out any particular areas, but
Right.
some of these other markets, I mean, Florida,
Florida's getting pummeled.
okay?
I think
So
they're
when the Fed sees that,
Yep.
how does the Fed react to that kind of stuff?
right.
Yeah.
In some senses, we're in a little bit of a bubble, because I think Boston has a very diversified employment base.
Yes.
It's wealthy, affluent. It's not cheap to live here, as we talked about before, but it's stable.
Yep.
We don't see those high peaks and valleys. One, because there's not much land left to build.
Yep.
You've got to buy, an old ranch and knock it down and put up something new.
Yep.
But you don't see those high peaks and valleys.
So like
So-
correlating it to a stock market, we're kind of like a blue chip stock versus
Absolutely.
a small cap or something, right?
Absolutely.
Okay.
You know, there are parts of Austin, Texas that are getting, they basically, from what I understand, threw out the zoning book in Austin, and everybody went crazy and they built. And again, that's the other side of the coin. It's like,
Yeah,
okay, in Massachusetts, we're trying to open up those zoning.
Other places are just a free for all.
Right. And there's too much inventory. So
Yep.
their prices are. But I think it's, for me, it remains a seller's market. I don't think that's going to change next year. I think all of the rental inventory of the larger complexes that have come in, those have all been filled.
They have. Okay.
Yes.
Okay.
So we're seeing some soft spots. There are some landlords that are offering the larger, they're offering a month free
Some
and things like this.
incentives.
Yes.
Okay.
But for the most part, vacancy rates are lower.
Okay. So the Boston market, whether buying or renting, is still a very stable, strong market.
It is.
Yeah.
It is.
Uh-huh.
And for both, and for an investor,
Oh.
it's a good place to park some money.
Yeah.
You know, I've got a client in Harvard Square that we just started managing for, and they bought a small studio for their daughter. She did graduate school, and we talked, and we're going to manage it, and they're going to keep it and rent it. Just because it's a really good place. They know, you know, real estate in Harvard Square,
Yeah.
it's not going to go down. Okay?
Right.
You're not going to have a bad day
Sure.
in the stock market.
Sure. Sure.
The appreciation, the mortgage write-off,
Yep.
tax benefits.
And I think there's a big contingent of clients too, correct me if I'm wrong, that prefer just a piece of real estate over, say, like the S&P 500 or crypto or some of these alternative investments, right? They like a piece of real estate, right?
Absolutely.
Yeah.
It's, you know, that old New England Yankee mindset of I want to be able to touch it.
Yeah.
You know,
Yeah.
you know, try to get one of those guys to do a 1031 exchange, and it's like I'm not going to let somebody else have my money for a month. Okay.
Yeah. Yeah.
But no, it's, again, we have a stable economy.
Yeah.
And so it's, I mean, even during the crash of '08, which was the crash of pretty much all crashes,
All magnitude. Yeah.
and Newton single families, that price came back in a year.
Right.
Multis and condos came back in 2.
And that was a big time litmus test, right?
Oh, huge.
Yeah.
I mean,
Yeah.
I mean, just enormous.
Yeah.
Let's talk about some of the mortgage products that you've been seeing be popular right now.
Yeah, so we were talking a little bit like before we came in, and,
Sure.
and you know, we have these sort of categories of like conventional loans, which are kind
Of course.
your standard vanilla. Most folks have probably heard of
Yep.
them. But a big segment of the market now is called non-QM. So that
Okay.
stands for non-qualified mortgage.
Okay.
And I would say these are really alternative mortgage solutions for unique situations.
Okay. Tell me more.
That sounds really broad, but let's say like a foreign investor that doesn't have any credit score yet, or any credentials in the U.S.
Yep.
Or let's talk about a self-employed individual who writes off a lot of their income on their tax returns, but can document their income alternatively through bank statements or 1099s or a profit and loss statement.
I can't tell you how many plumbers and electricians and contractors that I have that, again,
Yeah.
you know, on their tax return, it may not be a big number, but if you go to the Schedule C,
The gross
it looks
receipts are
pretty good.
high. Yeah,
Yeah.
exactly. So that's a big one. Another category I see a lot of is bridge lending, bridge loans.
okay,
So what we will do is we have a lot of buyers that own a house already, and this could be the Victorian, the 13-room you were talking
Right.
about with the downsizer. It could be the the young couple that bought in Harvard Square and now they want a single family in Newton, right? What we will do is we will access the equity of their existing property with a bridge loan and then pre-approve them to buy before they sell.
okay,
So the benefit of this is we'll release the equity, giving them the down payment, and then if they don't have enough income to carry both, we'll let them buy first, qualify them just on that property, and then they can sell this property after.
and that's a huge benefit
That's huge. Yep.
to both that buyer and seller, because they're not trying to juggle two things. somebody's waiting for, for them to close, to move into their place,
Yep.
to be able to buy,
Yep.
offers don't have to be contingent upon
Selling.
them selling.
That's right. That's right.
And again, it frees up, it makes the wheels move a lot freer.
It's sort of like we talked about. I think it's in this area, at least, it's very hard to buy, but for the most part, it's pretty easy to sell.
Correct.
So why not take
Absolutely.
the time to find that right property that you want to buy, put it under agreement, then you can list your home, and really have that flexibility.
And I had a conversation with a client today who was a referral, and she's been in her condo, her townhouse, for 30 plus years. Stairs, needs to downsize, and that product might be very good for her because, as she's talking about buying, something, she's talking about Needham or Wellesley. For a condo in those markets, you're looking at $1 million, sort of entry price.
Sure.
So, she may need a product like that.
Yeah.
Because otherwise, it's going to be very difficult for her to manage that move.
Yep.
Just logistically.
Yeah. Yeah. So there's a lot of new products out there that are very beneficial. I'd say it's gotten creative, not creative in the Great Recession creative, but creative in nowadays standards. And I would also say that interest rates are on the decline. So I know we all want to see 3%, but there's still a big segment of the market that's
Do you think we're
refinancing.
ever going to see 3% again?
Not in my
I'll tell everybody. No. I know you don't want to say it.
Yeah.
It's
So
a good, healthy rate. And what you were talking about when I asked about those interest rates being too low for too long, it wasn't healthy.
that's right.
We're clogged up right now, and a healthy rate is 5 to 6% ish.
That's right. That's right.
If you go back 30 or 40 years, that median, if you go back to the 80s, they were hitting 16%.
Yeah.
Okay? Nobody wants to see that, but for a healthy, functioning economy, a 5 or 6%, again, and that also gives the government a little bit of flexibility and tools in the toolbox if the economy gets too hot
Yep.
or if unemployment drops off.
That's right.
They've got some,
They've got some levers, right?
yeah.
Yeah. That's right.
some
That's
tools
right.
in the toolkit to
right.
fix things.
That's right. I mean, I still think we might see a fours 12 to 18 months from now. But I think it could be, maybe you don't agree with me, it sounds, but I think just to dig us, I think to dig us out a little bit. But I do agree with you. I think having that 5-ish range is a nice, safe, kind of good place to be. I do agree.
Yeah.
Yeah.
I mean, as the real estate broker in me would love to see that. However, I also know that would create a feeding frenzy, and we'd be seeing all those crazy offers again.
Yeah.
And you'd be writing so many offer letters.
You want me writing 30 pre-approvals a day again. Yeah.
Exactly.
Yeah.
So, but anyway, I really want to thank you for joining us.
Thanks for having me, Mike.
I thank you for joining us, and check us out on YouTube. And again, hopefully we'll see you next time.